Wall Street closes the week lower. The S&P 500 enters correction territory while the Nasdaq is off over 12% from its 2023 highs. Asia starts on the back foot this morning, but the gift Nifty is indicating a lower start for the Indian market. Crude prices ease from the weekly highs hit on Friday. Brent slips below the $90 a barrel mark as demand prospects remain uncertain amid geopolitical worries. Reliance Industries numbers beat estimates on most counts. The retail business sees stellar growth while telecom growth remains stable. Earnings from the oil to chemicals business also above street expectations. Dr. Reddy's reports a mixed second quarter with the U.S. business meeting estimates while PLI and other income and margins as well. BP sales numbers beat estimates as the refining vertical outperforms. Marketing, however, continues to be weak. And in key numbers to track today, watch for earnings from DLF, TVS Motors and Marico. Good morning. In the Mumbai News Center, I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines that we are tracking. It is a fresh new week and we have a lot to track as well, especially what's happening with respect to global markets and our own earnings as well. But first up, as always, let's take a look at what the Asian markets are doing. It's a weak handover that we've got from the Wall Street, and that is something that we are seeing in the Asian screen as well. The Hang Seng is absolutely flat, but with some negative bias. We have the Taiwanese index, which is higher. But apart from that, look at something like a Nikkei, which is down 1% as we speak. So there's a big cut there. We have the Shanghai sitting with cuts as well. We have Straits Times as well, sitting with cuts of around 0.6% as we speak. If we look at the gift Nifty, that'll come up for you on the screen, and that one is indicating that the start for our own markets, well, that could be in the red. It's a 28-point downtick, which the implied open is suggesting right now. We have the Bank of Japan decision, which the Japanese markets are waiting for as well. So a lot of macro cues as well to track. But yes, for now, looks like it could be a start in the red for Indian markets today. In the U.S. markets now, Wall Street ended Friday's trading session mixed. The Dow closed 366 points in the red, while the S&P 500 closed the day nearly 0.5% lower. The tech-heavy Nasdaq held 0.38% higher on the back of good results from Amazon. The Dow came under pressure after JP Morgan Chase's CEO, Jamie Dimon, said he planned to sell 1 million shares of the stock next year. Meanwhile, all three indices ended in the week with steep losses, each falling more than 2%. It's also a big week in terms of data. We have the Federal Reserve decision on Wednesday, where the central bank is widely expected to hold its benchmark interest rate, and the October jobs report due on Friday. Okay, on that note, let's stay with the U.S. markets and listen into what Mona Mahajan, the senior investment strategist at Edward Jones, on her outlook for the U.S. market and economy as well.
We've broken some technical levels on the S&P 500 and the NASDAQ, both of which had actually held in above their 200-day moving averages, except for the last couple of days when they've broken lower. So that does imply that perhaps some additional volatility, some additional downside momentum may be ahead of us. We do think as we look into 2024, we are entering an environment where inflation could continue to moderate, maybe not in a straight line lower, but we could continue to see moderation. We do think yields are headed towards a peak, and earnings growth, while they were flattish this year, could start to reaccelerate next year. So using this volatility, we think, is an opportunity for investors in the months ahead. We see opportunities forming in the equities and bond space. And in fact, in equities, we would say there'll likely be a more broadening of market leadership and market participation. You know, yes, the Magnificent Seven had led the rally this year. But if we're in an environment where we do have better inflation trends, better yield trends, we could see a broadening. And even as we reemerge from potential softening, keep in mind areas like small caps, cyclical parts of the market, even parts of international that have really gotten beaten up could play some catch up in that environment. And what I'll add briefly on the bond space, you know, we really see a pretty compelling opportunity forming, especially in investment grade bonds, where you have not only, you know, locking in yields for a longer period of time and longer duration assets, but this potential for price appreciation if and when the Fed eventually pivots to lower rates.
Okay, all right, that's the global market action, but how will these overnight cues impact our own markets? We have research team joining us to tell you just that. What is the trade setup looking like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to both of you. Rima, let me come across to you first up. Looks like it could be a down day for our own markets.
Indeed. So Asian markets around the globe have started off on a cautious note. It's a very big week for central banks, as you've been pointing out. The Bank of Japan meeting tomorrow. On Wednesday, you've got the Fed and the Bank of England. So ahead of that, there is a lot of caution. And plus on Friday, we had the US markets, ex of NASDAQ, slipping quite a bit. So the S&P 500 was down 1%. The Dow sold off close to about 0.4%. So there was a weakness that we had in the US markets on Friday's trade, which could carry forward in Monday's trade. That said, for the Indian markets, we did snap back that 6-day losing streak on Friday. So Friday was a bit of a rebound session for our market, but we're going to get pegged back today. Some levels to watch. I'm going to keep my eye out on last week's lows and high. So the low on the Nifty was 18,837, while the high was 19,556. So those would be some broad markers to keep in mind as we begin trade. We'll talk more about it, but Indian markets have a lot of earnings to react to. So there's Reliance Industries, there's BPCL, and a whole host of other stocks. But this week itself, starting today, you've got DLF, TVS Motors, Marico, tomorrow Bharti Airtel, L&T, IOC, Tata Consumer. On Wednesday, you've got Sun Pharma, Tata Steel, Britannia. On 2nd, that's Thursday, you've got Tata Motors. And to cap it off, you've got State Bank of India on Friday. So it's a big week of earnings in terms of flows. The FI's net sold 1,500 crore in the cash market, while the DII's net bought 313 crore. Back to you.
Okay, all right. That's a long list of cues to watch out for. Thank you so much for that, Reema. United Phosphorus also reports numbers today, so we'll keep an eye on that one as well. But for all the other stocks, that'll be on our radar today. Surbhi is joining us now. Hey, Surbhi, morning.
Good morning. So a lot of earnings that we'll be reacting to. The first one is, of course, Reliance Industries. Earnings were better than expected. Revenue was up 12% sequentially. EBITDA up 7.5% sequentially. Margins at 17.7% versus 18.3%. Dr. Reddy's revenues were up 9% on a year-on-year basis. Margins came in at 32% versus 31%. M&M Financial, it was a miss on the earnings led by a 9-quarter low net interest margin. Net interest income was up 8.5% year-on-year. Net interest margin was down 100 basis points on a year-on-year basis. SBI Cards, the net interest margins were at an all-time low, and the credit cost continues to remain elevated. Credit cost came in at 6.7%, net interest margin at 11.3%. NTPC, the revenue was down 0.3%, EBITDA was up 15%, and margins came in at 26% versus 22% same time last year. BEL, the revenues were up 1%, but EBITDA was up 17% and margin expansion of 340 basis points over there. MGL revenue was up 2% sequentially, EBITDA was down 8% sequentially, and margins at 31%. And some other companies that may react to numbers: Route Mobile, BPCL, Intellect Design, GE Shipping, and Piramal Pharma.
Okay, as we've been saying, we're in the thick of earnings season, so of course a lot of them that we are tracking closely as well. But a lot of action from the F&O space as well. Nigel is joining us now. Hey, morning, Nigel.
Well, morning, Sonal. On Friday's trading session, the much-awaited relief rally did come about. Was it a flash in the pan, or will it be more lasting? Well, we'll know today as well as tomorrow. Now, it was good to see the Nifty bounce back. It was heartening to see that even the broader markets did see a bit of a rally. So the mid-cap and the small-cap indices, they participated in style after seeing consecutive days of losing. What did the FIs do? One would have thought maybe they covered some shorts, but actually they didn't. They continue to hold on to their short positions, and the short positioning remains elevated at around 88%. As we made this point even on Friday, with FIs being net short very, very aggressively or being overtly net short, that may not be such a bad thing, because if the markets can sustain or maybe move up a little bit, then in fact we could see a bit of a bounce that plays out. What do they do on the option side? They bought calls as well as puts, so no big reading coming out of them. But on the writing side, they wrote more puts than calls, and that was heartening to see, because in an uptrending market, you want to see put writing. And the 19,000 put, well, that was fairly active in Friday's trading session. The premium out there, well, it ended closer to around that 81 rupees odd, but at some point of the day, it was closer to around 200 rupees. So going by that sort of writing that was seen at the 19,000 put, and on the upside, the 19,200 call was the most active strike. So you plug in the premium, 50 rupees premium, add it to around the 19,200 odd mark, you get your resistance level of around 19,250. While on the downside, the recent low, that's around 18,830, that becomes a bit of a support zone. For starters, I think the GIFT Nifty was suggesting we pull back a little bit to kickstart trade. Let's see how this goes, because the rally that we saw on Friday was good, but you'll want to see a bit of a follow-up either today or tomorrow and continue to defend last week's lows. Back to you.
Okay, all right. Thank you guys for joining us and prepping us up for this trading day ahead. So could be a down day. That's what the GIFT Nifty is implying right now. Time for a short break. When we return, Nifty heavyweight Reliance reported its second quarter earnings post-market hours on Friday. We'll get you all the highlights and the analysis on the other side. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast on CNBC TV 18. It's time to focus on some important earnings now. Reliance Industries reported better than expected earnings in the second quarter with stellar growth in the retail business. Sonia is here to take us through the details and analyze the numbers as well. Sonia.
Well, thanks a lot for that. As you rightly pointed out, it was a very good set of numbers from Reliance Industries. It was a beat on most counts for the company, especially in the retail sector, retail segment that is. It was a stellar performance that Reliance Industries saw this time around. The retail revenues went up 10.3%. The margins came in higher than what they saw last time around. Even the telecom business, actually, the numbers were quite stable. The average revenue per user increased 2.5% year on year to 181.7 rupees, driven by a better subscriber mix across the mobility and the wireline business. However, the subscriber addition was much stronger than what the street was expecting, and that was the big highlight this time around. Jio added an industry-leading 11.1 million subscribers during Q2, and the net subscriber addition was up 21.7% on a sequential basis, coming in at 11.1 million. The management says that by December of this year, they will complete the pan-India rollout of 5G services. A couple of other highlights included the lowering of the debt. So the debt of the company has gone down, and most of their capex has been funded by internal accruals. So all in all, good set of numbers coming through. The core numbers are up for you on your screen. Revenue growth of 12% sequentially, EBITDA up 7.5% quarter on quarter, margins at 17.7% versus 18.3%, while net profits coming in at a little under 17,400 crores. Even if you look at the oil to chemicals business, it was quite stable. The revenues coming in at about 1.48 lakh crores compared to 1.33 lakh crores quarter on quarter, and both the EBITDA as well as the margins were stable. In fact, EBITDA was slightly higher than what we saw last quarter. But let's tell you about the brokerages now. Most brokerages are positive on Reliance post the numbers. Jefferies has a buy with a 3,000 rupee target price. They say the risk reward is now favorable. Remember, the stock is still down about 20% from its 52-week high. The retail segment is improving. Jio saw healthy subscriber additions, and the capex is steady while the debt has fallen. Nomura has a buy with a target price of 2,925. They talk about healthy growth across all segments and that the debt is lower by 5,200 crores. And Morgan Stanley maintains an overweight with a target price of 2,821. Back to you.
Okay, positive commentary across brokerages. Thank you so much, Sonia, for joining us and your take on Reliance numbers as well. With that, we'll slip into a break. When we come back, we'll get you all the cues from the commodities markets as always. So stay tuned for that. Welcome back. Well, it's time to get to the latest on the Israel-Hamas war. Israeli Prime Minister Benjamin Netanyahu over the weekend announced that the war against Hamas had entered its second stage, with soldiers now entering the Gaza Strip for ground operations. Links to mobile networks, internet and electricity, they have been completely cut off in the Strip, and this has also resulted in difficulties for emergency services who are now operating with a system of communication within Gaza City. Meanwhile, hostilities continue on Israel's northern border with Lebanon as rockets and missiles continue being fired at Israel and intercepted from the territory as well. Okay, we'll keep getting you updates on this one. Of course, it's the big global news that we are tracking, but let's also track what's happening with the crude oil prices and also in the commodity space. Manisha Gupta is joining us with all the update. Hey, Manisha, good morning.
Morning, Sonal. Thank you for that. I'll start with the gold prices, where we are trading above $2,000 per ounce. Now it has been strong 3 weeks that we've started in gold, and this is the fourth straight week which has started on a positive note right now. With the U.S. government debt crossing $33 trillion, there is safe haven buying that you've seen coming for the gold prices. For the week, it's going to be quite interesting because you have the U.S. Fed meeting, but you also have the Bank of Japan and Bank of England monetary policy meetings in this week. And then you have the U.S. non-farm payroll data that comes in on Friday. So ahead of that, there is some profit taking that the crude prices seem to be looking at. We did see 3% of decline in the previous week. Remember, there is no actual disruption yet to the oil supply in Western Asia, and that has taken some premium away from prices.
All right. Okay. So that's what's happening in the world of commodities. Thank you so much, Manisha, for joining us and making sense of what's happening there. But let's stay with the commodity space and also listen into what Citi's Ed Morse says as he gives his take on where crude prices are headed from here on.
But the physical oil market is really a lot weaker than where the price is printing at the moment. People have been exaggerating the oil market immediate implications of whatever might happen. It looks like nothing might happen in the immediate future that's going to affect prices. So fundamentals are there, and we're seeing them in spreads, prompt spreads to second month. They haven't collapsed, but they've come in by a good 50%, which is a sign that the physical market is pointing in a different direction from the volatility, but we're still a good $10 below where the peaks were last month.
Okay, that's the update as far as the crude oil prices are concerned. It's time to get you some important national news now. At least 11 people were killed and over 50 others injured after two passenger trains collided in the Vizianagaram district of Andhra Pradesh on Sunday night. Top Railway Ministry officials said that the driver of the train that collided from the rear had missed the signal. Train services were disrupted on the Chennai-Havra line due to the accident. Prime Minister Modi reviewed the situation with Railway Minister Ashwini Vaishnav and has announced ex gratia for the deceased and those injured. Rescue operations are underway with the help of the local administration, and NDRF teams are also likely to reach. Okay, this is something which we'll be tracking closely as well, an unfortunate event that has taken place. But quickly, as we wrap up, we'll take a look at what the Asian markets are doing again, because they continue to be a mixed bag for now. But yes, largely on the falling side. So we do have the Hang Seng, which has extended the losses that we were seeing. It was absolutely flat when we started the show. It's down 60 points right now. The Taiwanese index is up. That's the only index which is seeing some green apart from Kospi. The Nikkei continues to be under pressure. We have the Bank of Japan's meet outcome, which is expected. So that is something that we'll be tracking for you closely. And we do have the GIFT Nifty, which will come up for you on the screen. It has also extended the losses that we were seeing at the start of the trade. So 36 points lower on the GIFT Nifty, indicating that there could be some pressure for our own markets, like what we are seeing in the global markets as well. With that, we'll take your leave on this edition of Breakfast. Stay tuned. Bazaar Morning Call comes up next.